Thank you, Mrs. Fleischer. So my presentation this evening will be in two parts. The first one will be the results of our financial audit. And with us this evening from Zelenkowski Axelrod, which is our auditor, is Brian Crucial. So before Brian comes up, I'm going to give an overview of the financial statement audit, what that means. Mr. Stengel, can you tee up my presentation, please? Thank you. So the first thing is the financial statement audit. This is an independent examination of the school's financial statements and accounting records by a certified public accountant. It provides financial accountability, compliance and regulation, assurance, transparency about budget processes, fraud detection, and debt insurance. And what you will learn from him in the next few minutes is that my clicker will only work for one click. There, got it. My arms have to be really high to get it to work. Okay. Is that our audit opinion for this school year is an unmodified audit opinion, which means an unaudited audit opinion indicates that the financial statements are presented fairly and in conformity with the applicable accounting standards. In other words, the auditor has not identified any material misstatements, errors, or discrepancies in the financial information provided by the organization. I'd like to ask Mr. Crucial to come up and join us at the podium where he will provide an overview of the audit. Welcome.
Good evening. Thanks for having me. As Dr. Fries said, yes, we had completed our audit beginning of December. It does include an unmodified opinion. Like she said, that's the best opinion we can give you. It provides reasonable assurance, not absolute assurance. No audit firm can give you absolute assurance that there's no errors within the financial statements, but we believe our work supports our financial statements, that there are no material errors. Our opinion that there are no material errors in that financial statements. A couple other of our responsibilities. We are at the service of management. These are management's financial statements. We are just verifying the numbers in these financial statements. So this is just your financial information. We audit it, put the report together, and put our opinion on it. Couple new standards last year where we have to communicate any significant risks identified during our audit to those charged with governance, the board. There are two risks that are inherent to every audit: management's override of controls and revenue recognition due to fraud. So those are the only risks we identified in our audit. That's not anything you did wrong. Those are identified risks in every audit that's done, from the smallest tax collector to the biggest Fortune 500 company. Those are just audit risks that the audit standards say we have to identify. We don't have any other significant audit risks in our audit documentation. We don't believe there are any other significant risks. As Dr. Fries said, the audit is complete. Usually we come here with a complete set and draft form, and then once the board approves, then we finalize everything. It'll be signed and then completed, and then we do file the annual comprehensive financial report with ASBO. There isn't anything really new accounting standard-wise in the financial statements this year. So last year, the big thing was leases, which ended up not having a large effect on the financial statements this year. This year, it was supposed to be subscription-based technology arrangements. We didn't have any of those here either. Those are generally year-to-year subscriptions, so they didn't actually meet the criteria for inclusion in the financial statements. So that wasn't a big change either. Getting into some of the numbers, the management's discussion and analysis on page 4, I think it goes page 4 through 15. That's really 4 through 16. That's really the changes from year to year. So a lot of comparative information in there. You can see what changed from 2022 to 2023 as far as revenues, capital assets, debt, expenditures. A lot more context in there than you'll see in the basic financial statements, because the basic financial statements are just a snapshot in time. They're for the year 2023. So if you do read through the management's discussion and analysis, you will see some of the changes from year to year. Your revenues, as Dr. Fries and Ms. Fleischer pointed out, were up a little bit. They were over budget, so were the expenditures. The revenues, you did have $1.4 million of interest revenue. probably 6 or 7 years ago, that was a significant source of revenue every year for school districts. And then for the longest time, interest rates were so low, it wasn't. Last year it was again. So that was a $1.3 million source of revenue last year. Expenditures are up. And you're not the first board I had to sit here and tell that to this year. There's a lot of school districts that we're seeing expenditures are up across the board, and it's not just school districts. We audit exclusively not-for-profits and governments. Everyone we're seeing are having trouble tamping down in expenditures and keeping their budget balanced without using fund balance. So your expenditures are up, and as was noted before, they were over budget. Some of that was offset by increased revenues, but not all. You did have to use significantly more fund balance than you thought you were going to. You can see that in the financial statements, there's a detailed budget to actual schedule. That's on page 58, I believe, of the financial statements. So you can see there, that's where we have the budgeted amounts, then the actual amounts as they reported at year end. So you can see there where your revenues were over budget, where your expenses were over budget. Really, in summary detail, not by line item, but a pretty good detail to see what functions were over budget and what revenue sources were over budget or under budget. Other than that, not a ton new. We don't have any findings. We didn't have to make any material journal entries. So when you see the single audit report, that's our report on federal compliance. There's no issues with any of the federal programs. You're in compliance with all the federal regulations. You're in compliance with all local regulations. As part of the single audit, we have to test compliance with laws and regulations, not only at the federal level, but PDE has laws and regulations as well that you're required to remain in compliance with. We found no issues with any of those, so there's no findings. You'll be a low-risk auditee again, which means that you haven't had findings for the last 2 years, and you haven't had a finding that I can remember. So you've been a low-risk auditee for several audit cycles now, which means that everything's filed in a timely manner and you don't have any findings. So that's your compliance staff and your fiscal staff doing their jobs as far as keeping everything in compliance. I assume there's probably some questions of me, so I'll turn it over to the board. If they have anything more, I can provide some context on.
Does anyone have questions for Mr. Crucia?
You mentioned findings, using the term findings. What would be an example of a finding that
So
you could find?
for a federal program, say we have to test a child nutrition cluster. Say someone was getting a free lunch that wasn't eligible for free lunch. Probably a poor example the last couple of years because everybody was eligible for a free lunch. But if someone in years past, when you had to qualify for free lunches, free or reduced lunches, and they were getting a free and reduced lunch, but they didn't actually qualify for it, that would be a finding. If we did have material journal entries, if we came in the books, we were required to go in and make audit entries to record accounts payable and material amounts, that would be an internal control finding over financial reporting. That would mean that the fiscal process did not catch these entries to get your financial statements prepared in accordance with GAAP. Title I would be if a teacher wasn't qualified to be a Title I teacher. That's hard to be in PA because most of the Title I requirements are just that you're highly educated, which in PA every teacher is pretty much highly educated according to the Title I guidelines. But it's stuff like that that you would be out of compliance with. If you spent federal funds on something on an unallowable cost. So a lot of those federal programs have very specific costs. The ESSER funds, everybody has a lot of ESSER funds. All the schools districts have a lot of ESSER funds. They are required to be spent on very specific things. And most of them actually require PDE approval before you spend them anyway. So if you spend ESSER funds on something that was unallowable, that would be a finding.
So the federal interest rates are up. Do you anticipate this continuing?
Your guess is as good as mine. I mean, I read the articles that say they're going to level off and they might decrease, and then, another report comes out that inflation's still high, and then they say, well, maybe they're not going to decrease. So I'm not an economist. I'm sorry, I can't give you a better answer on that one.
You mentioned seeing some trends from, public sector entities such as school districts or municipalities having more expenditures. Like, do you have any suggestions for, allocating enough resources? Or do you see any emerging trends that, other than to just budget?
It's hard because a lot of it's core driven. So how do you change your core functions? A lot of governments, they're seeing rising salaries because how can you keep people in government if they can go make money outside of government
Yeah, just like
without
labor
paying
market
them?
trends.
Yeah. So what can you do? You can't run a government without people. You're only as good as the people you have. So it's a hard issue to tackle. For a couple years, there was a lot of stimulus funding, and a lot of governments use stimulus funding to plug budget holes. So it kind of masks the problem, but also when that stimulus money ran out, then the problem was even greater because they didn't. If they would have raised taxes 2 years ago, they might have had a better chance to hedge that off at the end. But then basically they used stimulus funding to plug some budget holes, and then they kind of fell off a cliff. That's not the issue here. I'm not saying that's the issue here, but we have seen that.
Yeah.
With several government entities. Because the last thing anyone wanted to do was raise taxes during a pandemic.
You mentioned that a lot of school districts are seeing increase in expenditures, and that the state does not appear to be necessarily, well, I'll say that the state does not appear to be necessarily keeping up with those increased expenditures. So that becomes a lobbying issue for us to indicate that our expenditures are up over, and the state needs to keep pace.
Correct. Yeah. I mean, your transportation isn't as big of an issue, but a lot of school districts can't even find bus drivers. So let alone they're paying a lot more when they do find bus drivers. So that part of the state reimbursement for transportation probably didn't go up as much as their cost to support the transportation program at their school went up.
Other questions for Mr. Crucial? All right, thank you so much for coming out tonight. We'll take action on the audit a little later on in the agenda, so.
Thank you.
Thank you. Okay, the next part of the presentation this evening is a year-end financial summary for 22-23, and for us to discuss future planning for the school district. What you'll see on this first slide is the agenda. So we're going to do an overview of the 22-23 year-end financial statement, which will include the April 2023 estimated close to the 22-23 budget. It'll talk about expenditure projections from April through the end of 22-23 fiscal year, the year-end revenues, the year-end expenditures, and then the 2022-2023 year-end budget. We'll then talk about the current budget year-to-date for 23-24 and changes in practice under the new superintendent. The first slide that we're going to see is the slide presented in April to the board before the approval of the 23-24 budget. These projections estimated that the district would end the year with the need to utilize $51,635 of the approved $850,000 of the fund balance for the 22-23 school year to balance the budget. This number included revenue and expenditure estimates of how the fiscal year would end, and this was positive news for the school district. At the conclusion of the audit, it was determined that the April projections for the end of the 22-23 school year were underestimated in the major areas of professional service contracts, transportation, and tuition. All overages are accounted for as supports and services provided to students. These next two slides will provide a general overview of the final revenues for the 22-23 school year. On this first slide, you can see that our local revenues were budgeted at estimated $81.7 million, and they ended up about a little bit over $84 million, with a difference of an increase of $2.3 million, which was a 2.87% difference. When you take a look at our state revenue, it was projected to be close to $25.5 million, but it ended up just around $26.7 million, which was a difference of a plus of $1,251,999, which was a difference of an increase of 4.91% than what was budgeted. You'll notice here that in the federal revenues, we were projected to receive about $620,000. We ended up just short of $450,000, which was a difference of a negative $170,000 approximately, which was a difference of a negative 27.48% of the original budgeted. Overall, the total revenue budgeted was about $107.8 million, and the actual was just over $111.2 million, for a difference of a plus of $3.4 million. Summary of the revenue findings. What we found was in the final revenue for 22-23, we had a planned increase in real estate taxes from the previous year's budget approvals. We had earned income tax return to pre-pandemic levels. We saw increases in other taxes such as occupation privilege tax, delinquent real estate, and public utility realty tax. Our interest income exceeded budgeted numbers. Additional state revenues post-budget approval came in August, which gave us a bit of a boost. We did see a lag in payments for payroll subsidies such as PSERS and Social Security. We had federal revenue allocations that were lower than we expected, and then the medical access billing reimbursement was lower than we expected as well. When we take a look at the next few slides, we're going to look at the general overview of the final expenditure numbers for 22-23. In this slide, similar to the revenues, you can see that we are breaking these down by function codes of instruction, support, non-instruction, and transfers. Starting with instruction, the budget was budgeted to be around $65.4 million in expenditures, and it ended about $68.1 million, for a difference of just over $2.6 million. In the category of support, it was budgeted at about just over $29 million, and the end result was just over $30.8 million, for a difference of an overspend of almost $1.8 million. In the area of non-instruction, we were budgeted at $2.7 million, and we came in pretty close to that with just going under by $10,000, just a little bit over $10,000. In terms of transfers, we were projected at $11.3 million. We ended out with an actual of $11.6 million, which was a difference of just over $318,000. When you total all of those up, we had budgeted for just over $108.6 million, and our final expenditures for the year were $113.4 million, which is a difference of just over $4.7 million. So the summary of these expenditure findings, we saw significant increased costs for the 22-23 school year that were under budgeted in the final budget submission. These came in the categories of 6 unbudgeted teaching positions were added to the elementary schools that affected salary, benefits, and insurance projections, substitute services for teachers, bus drivers, and custodians. For the bus drivers and custodians, this substitute services were mostly because we had open positions that we couldn't fill. So our current employees stepped up and were willing to provide support to make sure that we could get the job done. Contracted services in the categories of nursing, paraprofessional support, and instructional services, transportation costs, and tuition costs. So for these next 3 slides, we'll provide a summary of the 22-23 year-end budget. On this first side, you can see basically all the information that I shared on previous slides, but just on one slide where it takes a look at revenues over expenditures. As you can see, the budget versus the actual for revenues was the difference of a plus $3.4 million. The difference between expenditures budget to actual was over by $4.7 million, which leaves us, after we take a look at revenues over expenditures, Under the budget category, the $850,000 was approved by the board when the 22-23 school year budget was approved. The actual was 2.1 million, which gives us a difference of 1.285 million that was unaccounted for originally. So for this next slide, we're going to take a look at a couple of different things. The first is that the superintendent, which is myself, and the school board of directors were informed that the fund balance was under the required 6% board policy in December of 2023. The actual revenue versus expenditures for the 22-23 school year show a deficit of about $2.1 million. Of this $2.1 million, $850,000 was planned for during the budget process in the spring of 2022. $318,725 was a planned transfer from the general fund balance committed to cover capital projects, which leaves us with $966,531 of unplanned expenditures that requires a transfer from the fund balance to end the 22-23 school year with a balanced budget. In February of 2024, there will be an action item to formally transfer this amount of just over $966,000 required to close out the budget for the 22-23 school year. With the anticipated transfer of the $966,531 from the fund balance to close out last school year, the fund balance will be just over $5.3 million. The next few slides are going to talk about our current year-to-date as it relates to our budget. This is something that you'll note is different for us this school year, which is to provide a monthly board report that details trends in our major revenue and expense categories to provide better information on how our school year is progressing financially. And this may be familiar to some of you because you may be taking a look at the board docs where this document has been uploaded. This new month-to-date analysis allows us to closely monitor revenues and expenditures to ensure we remain on budget for the 23-24 school year. The report provides an overview of what was budgeted, what the actual is for the year, and the forecast to end the fiscal year in the areas of revenue and expenditures. And you can note that the expenditures are broken down by categories as well. And then we think about future planning. Current planning is changes in practice under a new superintendent. As many of you know, I started as the superintendent in July of 2023, and I've had the opportunity for the last 7 months to observe and refine our practices as a school district. The next 3 slides are changes that have been implemented to improve district performance and increase transparency. The first category is changes in human resource practices. Some of the newer things for this school year are an annually review and update organizational charts to reflect all district personnel, to annually review and update reporting structures to ensure all departments have a reporting structure as well as a supervisor, continually reviewing and updating job descriptions to reflect current needs of the school district, conducting annual FTE reviews with the Finance and Human Resource Department to account for all staff and how they're utilized in the school district, regularly reviewing and evaluating all vacant positions across the district, maintaining real-time records of staffing patterns across the district, and then new for this school year will be to complete staffing for grades K through 12 in March. This had previously occurred for grades 6 through 12, but did not happen for our K to 5 students, which left us sometimes scrambling to meet the needs of teachers and class sizes. The next area is changes in budgeting practices. For this one, you can see there's quite a few categories here. The first one being a revised budgeting model for 24-25 to implement zero-based budgeting practices, revised budgeting timeline to allow for complete evaluation of all budgetary requests, develop next year's budget base using the previous 5-year actual spending trends, an assistant superintendent or superintendent in each budget planning meeting with budget managers, creating line items for each vendor under the appropriate object code to allow for better monitoring, line items tied to instructional staffing areas to track services provided and to allow for better monitoring, decreasing the amount of manually inputted data to include digital uploads to decrease data errors, and if not possible, a checks and balance system being used to review data before it's been finalized in the budget. Review all existing district resources. This includes textbooks, subscriptions, supplies, software applications, et cetera, for utilization and effectiveness to make decisions about continued use. And then capital fund projects will not be approved until the final budget is approved in May. The final category is changes in internal control practices. The first one is added 2 layers of approval required on invoices and purchase orders before payment. Develop a notification system that alerts the business office of new outside placements and transportation to ensure monies are available. If budget transfers become necessary, a multi-layer approval system will be used to adjust budget monies to accommodate unbudgeted requests before expenses are made. Updated internal controls for professional service contracts. Monthly meetings between the business office and central office administration to review budget versus actual expenses and make adjustments as needed. And as I shared before, these monthly reports to the board to include an overview of monthly revenues versus expenses. At this time, Mrs. Fleischer, that is my presentation.
All right, moving forward to board reports.